Happy Friday, everyone. This has been quite a week focused unintentionally, not about gold, but on Red Lake, West Red Lake, everything else. Lots of interest in this one area, and know who is better to end off this week to tell us about her entire experience. Gwen Preston, 16 years in the business, started off at the Northern Miner, but everyone knows her as the resource maven. Now dual roles. She'll still always be, I'm sure, to many, the resource maven, but VP Communications over at West Red Lake Gold. Yeah, we're thrilled to have you on because we're going to chat about everything and anything gold related, the market, debt, you name it. I mean, you've analyzed every company probably out there, and then why you went to West Red Lake Gold. I mean, we kind of briefly talked about it at the Red Cloud event, but I kind of looked at it as they had to have pulled you away. You saw something special here, and I want to kind of wrap that all into one big conversation where we give people all of your wisdom as long as you want, and then focus it into West Red Lake Gold.
Oh, that's a lovely idea. Let's try.
Yes.
Well, thanks for having us. I mean, it's a pretty, I love that you unintentionally ended up on, ended up focusing on like sort of Red Lake area this week, because I love that it was unintentional, because it's a pretty busy camp. Like there's a lot going on. And I think maybe more than people realize, it's obviously people know of Red Lake as a very important historic district, but yeah, it's cool that that happened.
It really is. It's a weird synergy. The universe decided to just map it out that way. And it's fun. Just to remind people, just so we had Kobe Kushner on Tuesday. We had quite a few people on for that. I think it's 140 people. And he's got his own deals. That's separate from this, but he started at the Madsen mine. So he's a mining engineer and CFA. Then we had Morgan Lekstrom, who's kind of next door over at the Goliath project. And I guess in some ways, maybe like a stepchild or stepbrother, because Frank Juicer's in both deals. I don't know how
his office is just over there. So yes, we certainly trade ideas, see each other around, whatever you might call it.
Yes. So it culminates with this, and why it's important is because we get to have a conversation just with the immense background and expertise you have in the space. I mean, you've seen every market. You've probably talked to just about every company. So you've got a good sense of what's going on. And we're going to try to dilute that out and grab as much as we can. And of course, that will center in on why you've chosen this project. And we'll touch on some of the tough stuff and some of the great stuff and where the opportunity is.
For sure. Yeah, for sure. Thanks. I mean, yeah, I find myself too often saying, oh, it's such an interesting market. But at the end of the day, it's almost always an interesting market, whether for good, bad, or wondering why it's not more of one or the other. Like there's always reasons that this market, it's always interesting to see how markets play out, right? And of course, I mean, I'm sure we'll dive into this, but the gold price is just this phenomenal powerhouse right now. And, you know, we're getting some of it in the stocks for sure. The bigger stocks are showing it to some extent, but still not to the extent that you would think. And the juniors are very much still lacking in the love. So yeah, it is a really interesting market. And of course, interesting is the word that those of us who love gold investing sort of dangle in front of ourselves, right? Yeah. Because we're like, it's going to get better. It's going to get better. This is the interesting phase. Then we get to the fun phase. And I mean, a lot of us have been saying that to ourselves for quite a while. But I think the powers are really lining up now, right? And we just had a big one this week with Trump being elected. I mean, I think either outcome of that election would have been good for gold, but this one, we have a precedent of his last term was really good for gold, even if the first few months, or especially the lead up to in the first few months, people were not exactly sure what to do. But then, you know, then it played out with sort of a 40% gain for gold over Trump's last term. So that's removed an uncertainty that was driving gold, but we always knew that uncertainty drivers are never persistent, because when you get an answer to the thing, then that force disappears. So it's almost, I prefer almost that now we have like a certainty driver, which is we know who's going to be in office. We know that no matter who is going to be in office, you know, the debt number was going to keep rising just in an unbelievable way. That's really what's the fundamental thing for gold these days. So I think that the gold power is just unbelievable. And then you put it in the picture of the bigger stock market, and I'm sure we can get into this. I think there's reason to believe that there will be more rotation into gold stocks, not just into gold, the metal, over the next little while.
Why do you think so many people in, I'll just say the West, have moved away from gold? I mean, I was looking even at what do you call it? Goldman Sachs today, and they're saying that the U.S. is like over 50% very heavily into equities, and I don't mean gold equities, I just mean equities.
Yeah,
and that's probably via your BlackRock, Vanguard, State Street. But as far as their cash on hand is very low. Any other assets, of course, there's housing, but the East seems to get it before even Brex. They kind of understood it.
Yeah.
West, I don't know what's going on with us.
I mean, I think it's actually, it isn't a decision to dislike gold. It's a lack of reason to have leaned into gold in the last 5 or 6 years or longer. And I mean, that feels on the surface perhaps a little odd, because we've been watching debt increase and seeing the unsustainability of government spending just rise and rise and rise. But that's a slow moving train wreck, right? That train wreck has been on the tracks for quite a while. So that's not the kind of thing that sparks people to move over at any particular moment, until or unless some sort of black swan or catalyst happens. But so that's been slowly unfolding. But a slowly unfolding background event is what it is. What's been in the foreground for Western investors in particular is a raging bull market in the S&P. And so why would they diversify? Why would they look for security? Why would they in Western investors in particular buy gold when those things are present, when the need to diversify, the need for security comes right up and is right here in their faces? Add on top of that, we were in a rate hike cycle for a long time and in a high rate regime for a long time. Those are also very clear motivations for Western investors, and have for a long time been reasons for Western investors to not be interested in gold. So there was a whole bunch of reasons for them to just not care. So it wasn't like an active dislike. It wasn't like they thought that it was an ancient relic or whatever. It was just that they were busy buying NVIDIA and making good money. So why bother doing anything else, right?
Yes. Well, that's also a funner conversation to have with someone when you say the debate on whether or not you have any scientific background, but AI is going to do this, it's going to do that. And that's a bit more optimistic or tantalizing. Whereas a debt crisis and I better buy gold is kind of like, oh.
I know, right? It's so true. It's so true. We head in the sand. Let's just buy NVIDIA. It's been doing great. And I'm not here to talk about how long or if or when that's going to change. I mean, I don't know the answer to that. And I think the Trump election hasn't added any clarity on that. I mean, there's lots of reasons to believe that the stock market is overvalued relative to GDP growth. I think that's sort of, take it back to 20,000 feet and you're like, GDP growth has actually been like, we've had the value of the stock market has increased something like I was listening to Trey Reich, gold analyst Trey Reich, a couple of weeks ago. We were on a trip together and he was doing presentations. And the slide from his presentation that just sticks with me is how over the last, I don't remember the exact time frame, but it's something like the last 15 years, the value of the stock exchange has increased something like 14-fold, and GDP is up a few percent, right? And you're just like, that's the disconnect. That's the one that somehow has to resolve. I have no idea. Again, that's sort of another back train wreck in slowly moving down the tracks.
Yes.
I have no idea. I'm not going to try and suggest when or how that might resolve. At some point, it has to resolve. I don't know what that's going to look like. But I think that now that we're in a rate cut environment, obviously we just got another rate cut yesterday. So we're in a rate cut environment. So that twigs Western investors. That's a classic, the most important classic twig for Western investors to be like, oh, rate cuts, that's when I buy gold. It's like a Pavlovian response. And for good reason, because rate cuts signal economic weakness. In times of economic weakness, you diversify away from owning the stock market and you try and hedge with other things. So that's why there's that response. So now we're in a rate cut environment. And when we start to be in that environment and people are actively thinking about why we need to be in that environment or what might be coming next, then that's when these things in the background, these slow moving things about debt and about overvaluation in the stock market, they become a little bit more present. They become a little bit more real in the moment for people. And those are the kinds of forces that encourage gold investing. And so I think that that's the process that's underway in the West right now. Now, the gold price itself, I think, has moved primarily, at least up until recently, because of buying in the East and not buying in the West. So the Western investors are sort of coming to this party after the gold price has already done a whole bunch of moves for similar but different reasons that were underway in the East for the last 5 years.
What's your take on like the Elon Musk factor? Because I can read different publications that say, the U.S. can manage the debt situation, we can do this and all that. And I mean, there's a little bit of bias on that analysis, but he's like a dog with a bone. He won't let that debt issue go. Like he's very vocal about this is unsustainable. So now he's a very big part now of this entire government. Now do you think he'll have a bigger say? Like, will now people be like, I'm not going to let this go. I'm going to keep talking about it.
And I mean, that's a really interesting, I think that's true. I think, like I say, this awareness of debt and the disconnects that increasing debt and spending have versus actual increase in economic output. I think this is just a rising awareness, and Elon's adding to that. Now, the irony is that neither Kamala or Donald has plans to really do anything different about spending. No. Maybe some slight, like they have slightly different approaches, of course, but like I don't see debt spending decreasing under Donald Trump. I didn't see it under Kamala either. And so now Donald Trump is in a tough position because his biggest, most vocal supporter is expecting and is encouraging masses of people to expect action on the debt front. Yes. And I mean, we all know the reason that the debt front is so difficult to change, the debt spending is so difficult to change, is because we've done all this money printing and inflation, and which has created, which has transformed the value of the stock market in a manner that it's just made it totally disconnected to actual economic output. And so there's no quick answer to that. So I don't know how that's going to play out. I think what you've raised here is a really, really interesting point that I think Elon is really bringing a lot of attention to an issue that Donald's not going to be able to answer. So how's that going to work? I don't know. Yeah.
I don't know. It keeps me up at night whenever I decide, listen, I'm going to let my brain go, put my feet in the water over here to think, how could you possibly solve this? What would be even not even political benefit, but what would be the benefit in even saying to the people, we're going to tighten this. We're going to make things tougher on you for the next 4 years. Like, no, it's supposed to be great. Everything's supposed to be fixed. You're going to fix everything.
Exactly.
That means print more, push it forward, keep out and just push. And that,
because it's such a massive disconnect and there's no easy answer, then the only answers that appear are things that are really quite austere, like what you're talking about. Like really tighten screws and like stop spending and like cut it all down. But that doesn't work for popularity, like you say. And then the other one is some sort of major financial system reset. And the one that Donald Trump has referenced and that those who are in his orbit have referenced is the idea of a gold-backed currency. And I mean, I'm not suggesting that Donald Trump is going to do that in this term, but I feel like that's the kind of conversation that might come up increasingly. And I mean, I think it already is coming up increasingly. And I mean, we had the BRICS meeting only very recently, and that idea is underway amongst the BRICS nations. It's in play in some places, and it's being elevated in other arenas. And so I think that that's an interest. I think that gold standard is going to be part of the conversation for the next few years. And so when we talk about, reasons for investors to think about gold, like, I think that's going to be one of them. I think that's when people are like you, when they dip their feet into this What they wish was just a puddle, but it turns out is the vastest of oceans. Yeah. And then they want to figure out what the lifeboat is. They're going to realize there aren't very many, and that like a gold backed standard is potentially one of them. And that's, you know, the more people who do that, then the more people who are going to think about gold, and therefore the more people who are probably going to be like, oh, well, maybe I should own some of that. That's the kind of thing that I think is going to play out, not in one day, slowly over time, with bumps up and down as various things happen. But this is all what's happening in the West, and that's layering on top of what happened in the East for the last 8 years. I'm sort of picking a number, when, you know, China's phase of insane economic growth ended. It was, you know, and so the things that had been working to safeguard and grow Chinese wealth for 20 years of phenomenal growth, those disappeared. That was the housing market, that was the stock market, and that was interest rates in China. None of those things work now for protecting or growing wealth. And so the Chinese wealth had to find another thing to do. And gold was the place that a lot of it went. Not the only place by any means, but the reason, I certainly strongly believe that the reason that gold did so well when we went through an intense rate hike cycle that should, by any historical pattern, should have sent gold prices way down. Gold stayed totally resilient through that rate hike cycle. That was because of Chinese buying. And then as the rate hike cycle flattened, gold started to rise. And that was because of continued Chinese buying that no longer had the pressure of Western selling because the rate hiking was over. And so now Western investors are just, their freighter is turning around in the ocean, starting to point towards gold. Meanwhile, the Chinese have already been over there for many years. And so the West is turning its eyes to gold while gold is already at like record levels. So it's a very, very interesting moment. But we started talking about equities. Chinese investors don't really buy gold equities. And so I think that's the big reason that there's been this disconnect for those of us who are gold equity interested. That's why gold has done so well, while gold equities have not. It's because gold has been moving because of mostly Eastern buying. And that market is not interested in Western gold equities. That's not a thing that they do.
Yes.
And the Western market hasn't been interested in gold of any form. Yeah. The metal or the equities. So now it's a question of, as Western investors start to turn their attention, look for the lifeboat, whatever the analogy is that you want to use. Are they going to start buying gold equities the way that they traditionally have when they see opportunity in gold?
It's interesting because this leads into, and it's kind of, we're culminating with the entire BRICS conversation. And I always ask people, it's definitely a story. It's definitely a narrative. It's happening now, depending on where you're on that spectrum of belief of how certain, are they going to have their own currency? Are they going to do this and that?
Yeah.
There's lots of narratives. What's your take on BRICS as far, like in the scope of the conversation, how you've kind of laid it out right now?
Yeah, I mean, I don't know if I have anything particularly astute to add to that conversation. I mean, it's one of these things that's absolutely underway. And for me, what matters from where I sit, or maybe it's just based on my knowledge, is sort of the context of it all, which is to say that why is, de-dollarizing, just as like there's this freighter slowly turning around with Western investors starting to pay attention to gold again, it's kind of similar to de-dollarization and deglobalization, which again, were like these ideas for decades. They were around as ideas, but they weren't realities. But then they became realities, and they became realities with the time is right in terms of the strength and the networking, the active public networking of the BRICS nations with Russia, right? Like Russia, China, bilateral relations, and the rest of them coming together and being like, look, we're strong enough that we're going to step forward and we are going to become a unit, obviously. So the time was right for that set of powers to do their thing. And then you layered onto that COVID, which, you know, laid bare the issues that are inherent in globalization and whatnot. And then, you know, the Russian invasion of Ukraine, which obviously had its own major impacts, both in terms of de-dollarization and deglobalization. So there was like a trifecta of things that came together. And that made de-dollarization and deglobalization realities, not ideas, not nebulous things happening in the background, maybe at some point down the road. No, they're things that are happening now. And so that's the context of the BRICS conversation. I'm not up to speed enough. You know, I read, you know, the news story on the recent meeting. And so I'm not up to speed enough on the details, but to me, what matters is that they're realities.
Yeah, I think that's the gist of it. Because once again, you can get into the weeds so quickly.
So quickly. There's so many weeds. Right?
Yeah. And that's interesting for a newsletter writer. I mean, and people read all sorts of angles, and
for sure,
left without enough direct conversation and you know, data from someone at higher levels of government saying this is what we're doing. That leaves us to go, oh, maybe it's this, maybe it's that. But regardless, like you're saying, is the net inflows of purchasing of gold from like Russia and China and all these other countries, that's happening. Are they actually meeting physically to talk about these things? Yes. Are they talking about creating their own IMF? Yes. They're doing all these things now. Exactly. And then people go, oh, but they can't because India and trying to get along. And it's like, listen, doesn't mean it's going to happen tomorrow. Doesn't mean that all of a sudden there'll be some sort of currency that you go, oh, look at that. But the fact that they're doing it, they're meeting, they're having
exactly it.
That's a huge. That's a freight trader is like, it's left the dock. It's, you know, it's going a direction now. You know. Once again, it's not tomorrow, but that's enough of an impetus for people to say, ooh, that narrative, that ship is sailing, along with the debt narrative, along with all the other narratives.
And once the ship is sailing, then whatever events arise, the ship is then part of the equation. It isn't just something that's at dock for future consideration, right? If there's some sort of global economic thing, or if, you know, if there's a debt crisis in a particular country, the fact that the ship is sailing is part of it. It isn't just it isn't, you know, it's a consideration. So we're on the same wavelength here. And
we'll kind of move into the equities here in a second, but I just kind of thought as well, the gold type of backed thing isn't crazy as well. I mean, people say, oh, it's totally not just crazy, because the US does, on paper at least, have a huge reserve of gold. You know, people would point and go, well, you know, China has a massive reserve of all commodities. They produce them. It would give them a sizable advantage if you did some sort of backed commodity type of solution. But gold, no, the US is still number one. So it leaves it as a maybe. So
absolutely. No, that's a good point. It is a possibility. And even if, even if the BRICS gold-backed concept or currency concept, even if it just becomes like a solid counter talking point to it, not something that's actually going to happen, you know, in the next 4 years or 8 years or whatever, but it becomes part of the, okay, well, if they proceed with that, then maybe we should also have a freighter that is slowly making its way forward, understanding what a Western gold-backed currency would look like, or whatever it is, right?
Yes.
Then, you know, it becomes part of the conversation. It becomes part of the reality, one of the options on the table, whatever you want to call it.
And my thought is that in times of transition of any kind, whether it's an economic transition, it's an energy transition, it's chaos in the markets, it's always good to lean back on fundamentals, on the foundation. Is it strong? And it's like, until we have the necessary plan that this is what we're doing, let's just chill out in gold for a while, because I don't know what the dollar is going to be like. And most people don't. They're not Forex traders. They don't know. It's like, let me just sit over here and just like evaluate that. And those that have been listening to you for years are very happy. And those that haven't, they're still, and I'm saying this under the context of moving into the equities, is that we don't need 5,000 gold to make projects attainable or worthwhile. It's not like people say, oh, we need to have Bitcoin here or energy here so that we can process Bitcoin at a good price, or we need to have this over here so that we can do this. It isn't reliant. We're already at outstanding prices.
Yes, for sure. I mean, even I talk about the Madsen project that we're putting into production all the time. The last time, it was only 2 years ago that the Madsen project failed. 2 years ago is not a long time, but Pure Gold, the previous operator, they ran from sort of 2020 to 2022. That's when they had this mine operating. What was the average gold price between 2020 and 2022? It was like $1,600, $1,700.
Yeah.
We are now $1,000 higher than that. Yes. Right. So I'm looking at this reality every day. I'm like, yeah, they struggled and there were lots of big complicated situation. We can talk about whatever. Yes. There were lots of reasons that they struggled, and we are addressing those and moving it forward. But I mean, the goal and the reason that we put the company together when we did was because of this concept that gold was going to do what it's doing. So it's very happy making for that to come true. But like at the end of the day, I mean, we're putting together a pre-feasibility study right now, and we're literally layering the economic model onto the mine plan right now. That's what's happening because we want to put this thing out pretty soon. And gold price, what gold prices to use when, and the forward forecast for those gold prices is a big part of the conversation because the gold price has moved so much in such a short period of time. And the forward curve for gold is unreal, right? Like it's unreal. I've also been in conversations with, we just announced this access to capital, right? We did a financing and then we did a non-binding debt facility that goes along with that as part of deciding how to access the last piece of capital for this mine build. We had lots of conversations. We talked with streaming companies. We talked with gold prepay companies. So we were looking at things like, okay, if we're going to do a gold prepay, would that require some hedging? So then you look at hedging and you're like, but the gold forward curve means that hedging would have us hedging gold like almost at $3,000. Like, that actually starts to feel okay. So it's just been a really interesting moment to be layering economics onto a mine because of this insanely strong gold price environment that we're in. So I didn't mean to bring the conversation to Madsen right away, but I've been living the reality of what this gold price means for a mine and for mining projects. It's so cool. And yes, like I really hope that investors start to see the money that gold miners are making and start to be like, whoa, that's pretty awesome.
That's not bad. Yeah, that's right. Yes. No, the numbers are staggering. And now, granted, I spend a lot of time, like 85% in the exploration side, which is, as you know, complicated enough.
Yes.
Next level complication when you're like, okay, let's actually get a mine in production. Because that's like between the engineering, between the finance, everything, it's the next level. And this is good because we get to use West Red Lake Gold as a great example of sitting snugly in between kind of all that. More obviously, well, it's not an advanced exploration; it's a mine ready to get going. It's controversial because it's unfortunate that the Pure Gold team and those invested in it didn't go forward, and it looked like amazing. That's for some people's loss. New people can look and put new eyes on something. So we'll get that take of what you understand from that and what attracted you to it. And under the kind of the headline of a good question we had come in here is saying, was it the ore body? I was like, is this more of an ore body issue or was it a finance issue kind of thing? So we're going to get more of the detail specific, but we're going to just kind of bounce around all over the place here.
Sounds good. Sounds good. Okay. Of course, when that question, is it an ore body issue or a finance issue? Basically is like the entire, I don't know. It could be a question that encompasses more. Very, very good question and literally encompasses everything.
Yes.
Because it was both. Now, I think when there was a time when it was commonly assumed that it was debt that pulled Pure Gold under. And I stand here today and say that is too simple. That is too much of a simplification of what happened. So I'll say it in sort of brief now, and we can dive into any of the points in more depth. But I mean, I think our standpoint is that the issues for Pure Gold started with a lack of understanding of the ore body. So I'm kind of standing here saying it's not the ore body's fault. Right? It's a Red Lake ore body, right?
Yes.
So it is a narrow, high-grade vein, and it is not like consistent all the way along the vein. It is in lenses, if you want to call it, because that's the way that Red Lake Gold is. So take it for what it is. It's Red Lake Gold. If you want to mine Red Lake Gold, our standpoint is that you have to drill those veins on like 6 to 8 meter centers to actually know where the gold is. Because, and if you don't, then you'll end up mining unmineralized material far more than you perhaps expect, because it is inconsistent. That there is a lack of continuity, right? You know, the alteration systems are very continuous. You can, and the resource model upon which Pure Gold planned its mine, that envelope was a pretty accurate capture of where the gold exists. But if you assume that the gold is evenly distributed through that alteration package, you're going to end up mining a whole bunch of unmineralized material, because that's just not the way it is. It's concentrated in certain spots, and then there's other spots that have almost nothing. Yes. And so if you do, our approach is that if you do, that resource model that they did was based on 20-meter spacing between drill holes.
Yep.
We're tightening our drill hole spacing to an average of 7 meters.
Okay, that's wow. Okay,
so it's a lot more data, right? Yeah. That's why we've done 44,000 meters of definition drilling in the last year, and we haven't actually changed the resource number. When we put our pre-feasibility study out, we are not issuing a new resource. The drilling has all been definition drilling into the known resource so that we can mine the gold and not mine the unmineralized material. And so that's the fundamental thing. So when Pure Gold was delivering material to its mill, we all know that for most of the mine life, they improved it right at the end, but for most of its operating span, Pure Gold was delivering material to the mill that averaged like 3.5 grams per ton. And their feasibility study expected it to average 8.5 grams per ton.
Yeah.
So that's, you don't even need to know anything about mining to understand that that's not going to work. Yeah. So it's not the ore body's fault. I think it was a definition drilling fault. Compounding that was a few decisions that they made about how they were mining. This is some details about mining approach. They did what's called blind uppers, which is, instead of, if you have like if this is your mineralized material, what they did was they developed under a tunnel then they drilled up and let it break down.
Yes.
And so that meant that sometimes they would drill too much, and they would end up getting unmineralized material from around the ore body that would also break down and dilute. That's called blind uppers.
Okay.
The other way of doing it is to develop both top and bottom, and then you constrain the section that you're mining to exactly what you want to mine, and then you pull out the mineralized. So there were some decisions around how it was mined that probably compounded the lack of accurate understanding of where the gold was. So that's the grade issue. Yeah. Then on the debt issue, I mean, did they have enough money? Well, I would say there were some capital projects that they didn't do before mining that would have put them in a better position when mining. And they didn't do those because they didn't have access to enough money. Yeah. So if this, you might have to dig into your memory banks quite a bit for this one, but their initial mine plan was to build a new portal to come into the deposit from the east. East. And they did that. They made the portal. It's a beautiful big portal, much bigger than the historic West portal, which is only big enough for 30-ton trucks. This one can accommodate 60-ton trucks. Nice smooth ramp. It's right beside the mill, right beside the crusher, really efficient setup. They started doing that, and then they're like, oh, we don't have enough money to do all the development. It costs $7,500 to do 1 meter of development. So they decided they didn't have enough money to develop all the way down to the ore body. Okay, we'll just use the West portal that we already have, and we'll go from there.
Yeah.
And that decision meant that they had a whole bunch of constraints around what size of trucks they could use and trucking efficiency, because it was not the best laid out tunnel system, and they had to cross public roads. They had to drop the material out of the trucks and reload it into insured surface trucks to cross the roads. They could only do it in daylight hours. Like that. Yes. That's an example of how not having access to capital ahead can kick you once you're in operation. So I think when people talk about a debt issue, one way of looking at that is that they didn't have access to enough capital ahead of time to do some of the things that would have given them a better chance of succeeding in operations. So doing that east portal that we're now doing. That's the connection drift. We're connecting the east portal and the west portal. That's our 1.2 kilometer connection drift. We're doing that $10 million project. You know, they had a leased sort of temporary primary crusher that wasn't very well installed and parts of it didn't work. That also, so those are they didn't have a maintenance shop. It's hard to get good mechanics if you don't have a maintenance shop, because good mechanics don't want to work in the snow and mud. They want to work in a nice shop. Yes. And if you don't have good mechanics, then you don't have good equipment availability, and equipment availability is really important for mining efficiency. So those are the capital projects that we are doing.
Yes.
So to try and not end up with some of those struggles that they had. And then there was, from our understanding and talking to a lot of people who worked there under the prior operator, one of our mantras at West Red Lake is, if you can't measure it, you can't manage it.
Yes.
And so, you know, cost to actual accounting is already part of what we're doing, right? And that perspective was not present under the prior operator. So I think there was perhaps also just cost awareness, control. Maybe that was also limited under the prior operator. So yeah, there you go.
I've read some forum stuff. Yeah, no, but I was going to say, I've read some forum stuff. So this is more of a speculation. Like, and it kind of sounds like, was it hurried? Were they in a bit of a rush? Like, let's get this going. Like, yes. There's excitement. There's excitement. Like, yes, let's get going. Let's take advantage of gold. It seems to be moving. But maybe there's a lesson in that, is that, and I want to.
And I mean, I think that also tags into the, when I say there used to be a sort of more simplistic view of what happened, people say, oh, it was the debt covenants. Yeah. They had too much debt and the debt covenants. And yes, the debt that they did take on this debt with Sprott, and the debt required them to get into production at a certain time. So they were in a bit of a rush to at least declare commercial production. So that was part of the story for sure. But that's all just, those are decisions that you make as an operating team. We've been going through that, right? How are we going to access our last piece of capital? What burdens? We were deciding between doing another equity raise or adding another portion of debt, whether it was a stream or a gold prepay or something in conjunction with the Nabari debt facility that we're working to close now. And we just went through this whole thought process. Do we want to add another burden on the asset, or do we want to take the hit by issuing more equity right now? And we decided to take the hit because we want to give the asset the most opportunity that it can to shine when we turn it on. But these are decisions that you have to make ahead of time. They're not easy decisions.
No, and I'm glad, because that was kind of leading up to that, is that this is why it's so critical to assemble a team that has seen this type of thing before, that can pick up something. And it's unfortunate, but sometimes the mistakes of someone prior or early, and one could say the same thing with Great Bear. I mean, people had Great Bear before Great Bear.
For sure. And then Dixie Project had seen drilling before. Let's be clear.
It wasn't, but lots of people said there's nothing here. We've drilled it. There's nothing here. So it's often, when people look and go, no, there's something here. I just need to look at this with a new set of eyes. And
exactly.
I think people can get a sense that if you're hurried and you run into some issues, how fast it can run into issues very quickly. Just what you're saying, like the equipment. Oh, but the angle maybe of the ramp was not quite right. We got to change it. Well, at $7,500 a meter, we're not changing it. So you can just see all this stuff can ramp up, and that's the difference between even just saying, hey, it cost us $400 to drill a hole or something in the middle of nowhere compared to $1,000. This is now amplified times 10.
Exactly. Yes. With debt facilities and debt covenants and shareholders and like all of this bearing down on it. That's a great capture for sure.
And now I'll put a preface here. We're not talking any numbers. Like I want to ask about all-in sustaining costs, but I don't want to, because obviously you don't have a feasibility. But I kind of wanted to get a sense, because we see like Barrick under the umbrella of Barrick and Newmont, like their costs, like they jumped up. Agnico has done very well. Their costs are still quite low. So that's a big part of right now. And I think that when we're looking at you guys, and you're very cognizant of where inflation is, the cost of things, it's tough. Except what I want to ask, I don't think you can answer without doing any pre-feasibility or evaluation type stuff. How are things in your modeling of this far that you're feeling confident in regards to price point of gold and then cost of I don't know if you can answer that one. It's tough.
I mean, so for sure. So what I'll answer it in two different ways without getting in trouble or being offside in any way. So
yes, okay.
One way that I'll answer it is, okay, we're about to put out this pre-feasibility study.
Good.
And you know, given the history of the asset, I'm sure I already know there's a bunch of people who are saying, okay, but are you going to do a feasibility study, right? Because the idea that it's a pre-feasibility study makes people wonder if the document is going to be lacking in some ways in its substance. Yes. We are being very clear to answer that from where we stand, this is our mine plan. It's labeled a pre-feasibility study because there have not been reserves on the asset before, and the regulators really wanted us to do a pre-feasibility study. There was also timing. We were trying to do everything very quickly. There are one or two components, really just one, the shaft, that perhaps couldn't be engineered to a feasibility level in time. The shaft rehabilitation, I should say, that couldn't be engineered to a feasibility level in time. So there are some reasons why it is a pre-feasibility study, but there are reasons why we really believe that this pre-feasibility study will be a sufficient, comprehensive, and accurate mine plan upon which we can operate. And the three that we pointed to in our recent news release, the first is costing. And so this kind of comes, the reason that I'm bringing this up is because of the question you just asked. So
yes, yeah,
you know, pre-feasibility studies usually have to rely completely on cost estimates. They look at sort of like similar operations, and then they have to estimate what costs will be for underground development, for trucking, for labor, for all of these things. We've been developing underground for a year. So all of our underground costing, our mining, our blasting, our moving of material, our labor, that's all real. We've been doing it for a year already. So that's a very significant de-risking component on the cost accuracy front. The mill operated only 2 years ago, and while perhaps there wasn't great accounting, there was reasonable accounting, and so you can do forensics and you can look at those numbers and you can get a very clear idea of what it costs to run the mill just 2 years ago. And so we think that our cost numbers are going to be accurate because they're real. They're not estimates, they're real. So I think that's a really important factor in understanding that. And we also, pre-feasibility studies are usually drawings of a mine that you plan to build. And of course, this mine is built. So there are outstanding questions about how it will be built because it is already in place.
Well, let me just jump in for a second, because I had one person reach out and said, like, okay, I'll take a look at this. And they go, well, they're doing a pre-feasibility. Like, what? They don't even have anything. I'm like, they've already been mining there. Just hold on, take a step back, because they didn't know. I was like, they're only doing a pre-feasibility. Right?
This is one of the things I've been talking about with people lately, is like, we're not doing this in a normal order. Right?
Yes.
There's a very normal order in which these things usually happen. And that's not what we're doing at all. So I get when people come up with that response, I totally get it. We've been doing a pre-feasibility study, but we're already essentially mining, right? Like, you know, we're valued as an unfinanced developer, but actually we're a financed operator with a mine that's about to turn on. Like, so there's, it is a confusing situation that I hope will get more clear next year as we turn the mine on, and then we're it.
Well,
So, but there aren't going to be outstanding questions in the pre-feasibility study about how the mine will be built, because it's built. So these are the reasons why. And of course, it's a pre-feasibility study. Usually in a pre-feasibility study, there's a whole bunch of definition drilling that still needs to happen. Now, we will never stop definition drilling, but we've done enough definition drilling that the first 18 to 24 months of our mine plan is stope defined. Now that you don't actually show stopes in a pre-feasibility study. Oh, look at that. Look at you. But that exists in our internal mine plan, that those stopes already exist. So this is our mine plan. This pre-feasibility study is our mine plan. Now, I'm not going to talk about what the all-in sustaining cost is going to be, because this is a document that we're going to issue in a couple of weeks. I will say that if you have access to the analysts who cover us, like Raymond James covers us, Cantor Fitzgerald covers us, they have very we like the models that they built. We think that those models are pretty accurate. So you can look at all-in sustaining costs on the models that those analysts have built.
That's great. We can add.
I would have even a few weeks ago, I might have even mentioned what that number is, but with the pre-feasibility study so close, I'm not doing it.
I know, and I forget because I get excited. I'm like, oh, let's talk. Like, can we even say like it's 10%? Like, I was like, no, you can't, Andrew. And,
just.
And then we have people too that ask in, and you're like, you're like, well, I have to ask you. Go, I can't ask that. And also it's kind of silly because it's like when someone asks me, oh, Andrew, what's the price of gold going to be next year? And I'm like, well, I mean, I could give you a probability number off the top, but I mean, you're like, in a way, you're asking me to tell the future when we don't have the data. We don't know for sure. And in this case, you're going to have some data here.
I have a bunch of data in my head that it's not public yet, so I definitely can't talk about it.
Then you definitely can't mention anything. So we'll leave that alone, put it to bed. What's the time frame here then for this pre-feasibility study then? Where are we at? Where do you think that?
We're really pushing to get it out in November. It's
okay.
Yeah. I know that's this month, right?
Yeah.
We're really pushing. I mean, whether it sneaks into the first week of December, we shall see, but like we're really pushing to get it out sort of in the next month.
Wow. Okay. So that's not waiting very long at all.
No.
And of course, that will also inflame the forums. Once they get it, they'll be there. Well, what about this or what about that? But at least that's worth talking about. But we'll have
at least then, like you say, the mine that we are planning to operate, the definition of the plan for that mine will be out. And then we can at least all talk about it. And also then I and Shane, when we're talking about the story, we can say things like, we are going into production, instead of the thing that we have been saying and continue to say, which is we are pushing towards, our goal is, because that at this point has to be the statement. We don't have a mine plan. And so it is all a goal until we get this major catalyst done.
And along the way, and as you said, and kind of, we didn't get into detail, the infill drilling and whatnot, the results you've put out, like in August, September, October, I mean, these have been great results. Like these aren't like, oh, like those are okay. Like, so I don't know if you want to address that. Like, I mean, there are infill drill holes, but it's, once again, you have a thesis. We're going to go in tighter. We went in tighter, and boom, look what's happening.
And I mean, I think the thing to draw attention to there is that those results reinforce what I said off the outset about what happened, that what the biggest problem was for the prior operator, which was that Red Lake gold exists in these high grade veins where there's a whole bunch of gold in one spot and then not any gold, and then a whole bunch of gold and then not any gold. And when you drill into the whole bunch of gold spots, you get really lovely numbers, 20, 30, 40, 50, 100 grams per ton in those hits when you hit those lenses. And you need to know where they are. That's why we're doing the drilling. And our entire mine plan is based on defining a mineral inventory. So that's like the mineral inventory are the tons that are in our stopes that we plan to mine. That's our mineral inventory. And our mineral inventory, the average grade in that mineral inventory is higher than the resource. And it should be, based on everything that I was just saying, right? Because we're planning to build stopes around where the gold is accurately, and then not mine the parts where the gold is not. And so, and then you apply a dilution factor, because this is mining and mining is imperfect. And so then you apply a dilution factor, but our goal is to deliver material to the mill that grades about the average of the resource. And you can't mine a 7.5 gram per ton resource and then dilute it and deliver 7.5 grams per ton to the mill. So you have to home in on the lenses, mine the lenses with some dilution, and then deliver that to the mill. So that's the message from the definition drilling. The two messages are, we're doing the work that is needed if you want to mine successfully in Red Lake, and that's a lot of definition drilling. And those high grade hits reinforce the rationale for that drilling, which is we have to figure out where the lenses are so that we can mine the lenses. And then there's also fun stuff. Like we go back up to McVeigh, which was, everybody thinks of McVeigh as the zone that killed Pure Gold.
Yes.
And fair enough. When they did that switch, when they decided to go to the west portal, the old west portal, instead of going in through the new east portal, the east portal plan was to get into the heart of the Austin zone. They switched and decided to go into McVeigh because that's where the portal was, and McVeigh was right at surface, so they didn't have to do as much development to get into it. But unfortunately for them, McVeigh is geologically the most complicated part of the ore body.
Oh no, okay.
The mineralized system at Madsen, like it's the most folded and remobilized and complicated part of the mineralized system. But complexity can create very high grades.
Yes. Okay. Yes.
again, you do the work. If you do all the drilling to find out where it is, you can get some really, really nice results out of McVeigh. So if you go back and look at previous results out of McVeigh, and we've just moved we moved a drill back up to McVeigh a couple weeks ago. So I expect that we're going to issue some more results from McVeigh in the next, I don't know, couple weeks. McVeigh is turning out some really nice numbers for us, but you have to do the work. And that's sort of the fundamental story for the whole system is you have to do the work. You've got to do the definition drilling so that you can define your stopes onto the actual mineralization. And then you'll be able to mine the Madsen mine.
Even in my head, it's the overall story is becoming clearer when you see, like if you just looked at that one zone and said, we'll just basically just chomp it out. You go, no, there's so much material. It's no good. But with a new set of eyes, and also I'll back up by saying, and if you've got pressure already, you wanted to, like with the previous, operators, it's easy to make worse decisions and can roll forward more whenever you have a bit more time to go, fresh eyes. Let's look at this and go, yeah, this thing's folded up in all sorts of weird ways. But there's stuff there. Let's just look at how we can get at it.
Yes. And I mean, I think that also, to just jump in a bit there, I mean, when we first bought this asset, there was an idea out there that we were going to be able to turn it on again very quickly and for not a lot of money. People said, oh, in 6 months, $50 million or $70 million or something, they'll be able to turn it back on. That was never actually our premise. We never said that. We never, because of it.
It's amazing how forums work. People go, oh,
right?
Yeah. It's like, does management know? No, they don't know that yet.
Yeah, exactly. But it's because of exactly what you just said, which is that you need to take the time, look at the zones, figure out what happened, figure out what the fixes are, and then do the work to implement the fixes, which for us is a lot of definition drilling and a lot of underground development so that we have good access to all the places that we need to access so that we can have enough stopes so that we can feed the mill. And so it takes time. I mean, we're still pushing really hard to take this asset from purchase to production in 2 years, which is a short period of time. But nonetheless, every day I talk to people who are like, why is it taking so long? And you're like, we are like duck. I mean, I think we're like ducks. We're paddling so hard under the surface. We're trying to maintain calm above the water.
Yes.
We are paddling so hard to get all the work done so that we can accomplish that 2-year goal.
That's great because you're close. I mean, you're going to have you're going to have a lot of numbers out very soon. And that's exciting. I always like to see too, when you're looking at like a stock story, what's the urgency or what's, sometimes I've had people say, well, in 6 months we'll have this. I'm like, okay. Like that's not like, that's fine.
I know that feeling. Yep.
Come talk to me in 5 months. Like,
I know that feeling well.
Because we already have to tell people all the time to be patient in this space. It's mining after all, but you don't want to say be extra patient. But they're like, I've already forgotten. I've moved on.
No, for sure. And so, it's an interesting, it's kind of like, I feel like it feels a bit ironic from where I sit because we are moving ahead so fast, but this somewhat the nature of the beast, the backstory of the asset, that it failed only 2 years ago, the fact that we're doing everything at the same time. And so there's lots of people like some of the people who've been writing in today who don't totally understand the status of the asset, the plan, the timeline. I get it. I live this black hole reality every day. So even though we're moving so fast and there's very few new gold mines going into production in 2025, let alone new gold mines owned by small companies, which arguably offer the best leverage to new production amongst gold companies. I mean, I see lots of reasons why this is a fast moving, high leverage opportunity. But at the same time, there's this black hole of information that makes people not necessarily see what I just said. Now, I'm hoping that the financing, closing the debt facility, putting the PFS out, making an official restart decision, those are goals of ours, very near-term goals of ours. And I'm hoping that accomplishing that body of work, those big catalysts, will help with that black hole. And then people will see what it is that we're doing and how soon we're doing it. That's my goal. That's what I'm working on.
Yes. Well, okay. So I can clearly understand, as far as the company's concerned, West Red Lake Gold, why they would have chased you down. They said, okay, we need someone who can relay this message and this story that has an expertise. We can't get just someone who's new to the business come in and go, hey, pitch the story. Like, tell them about what's going on. It's too much. It's got a history.
It's a complicated one. It's a big one.
it's big. But at the same time, you've, and I mean, I don't even have to be quote unquote promotional. And once again, we don't work with you guys. I'm just so there's no promotional aspect to this other than you have seen lots of projects. You saw this project and you decided to go for it. So that speaks volumes to all of the followers you've had over 16 years who go, huh, wait, what? Why are you going over here? What are you doing? That, and obviously we're not going to ask you as well. That would have been quite, they would have had to chase you down pretty hard. And that speaks to what they've got. So anybody who does know you, has been to any of the MIF, has been to, seen anything online, they would know that you know your stuff. You've been around forever. You've seen every kind of project, and yet you've decided to narrow down in a great gold market to go, boom, this is where I'm focused. I'm laser focused on this.
Yeah. And I mean, thank you. Those are very kind words. But yeah, I mean, I think there's two major things that if I had to distill, it was a big process, like giving up Resource Maven, like abandoning my identity, the business that I built for 10 years, all of that is a huge decision for sure. But if I wanted to just focus in on like the two main things that made it happen, the first is that when I look back over my career as an investor in the mining space, I mean, I'm like you. I love a good exploration story, and I've owned many of them over the years. But there's huge risk in investments in exploration stories, right? Like huge risk. We all know that. So the returns can be phenomenal when they happen, but the risk level is very high. Okay, so then if I looked more deeply, well, where did I find the best pairing of lower risk and high returns? And that is in companies putting mines into production, especially first mines or a second mine that significantly increased the company's production profile. Maybe they had 60, 70, 100,000 ounces, and then they put in another 150,000 ounces. So they more than doubled. Those zero to hero, or whatever you want to call them, those like putting mines into production stories, those are the ones that gave very reliable, good returns. So I was like, oh, as I see this new gold market unfolding, I kind of already had decided that that was the area that I wanted to focus on because I just got a little tired of the risk, right? We can all get, I still love a good exploration story, believe me, but I got a little tired of the risk. So the fact that this was an accelerated to production story, and it's at a time when I feel like there aren't that many near-term producers, that was very attractive in and of itself. And then the team. I mean, I probably, like many others, when I first saw the announcement that a new Frank Giustra-led group was buying the Madsen mine, a year and a half ago, I was cynical. I mean, we all watched Pure Gold burn, and so I was cynical, and I think a lot of people were. But I was lucky enough to then be invited to go on a trip to visit the mine, and I'm not a geologist, so site visits aren't, for me, they're not about geology. I learn about geology when I'm there, but it's not about putting my hands on the rocks. It's about everything else. And the everything else that mattered on this trip was talking to the people at the mine site. And so West Red Lake bought the asset and then restaffed to the extent that they had by June of 2023. They brought, people back on site. And most of those were people who had been there under Pure Gold. Of course, they knew the asset. They were local. It made sense. And so then I talked to, 15 people that day who had lived through the Pure Gold experience in all of the roles across the mine, from honestly, like the person who cleaned the floor of the mill, through to the person who cut core, through to the person who engineered stopes, through the person who ran the mill, like the person who tried to understand procurement and make sure that equipment was maintained, the maintenance guys. Like I talked to all of them. And what struck me so strongly was the consistency of the message that they all believed it was possible, but there had just been too many impediments in the way in how Pure Gold had approached the situation. And when we went through a bunch of those examples, from the maintenance guy to the mill guy, to the geology person, to the engineering person, and talked about what those impediments were, I was like, oh, these can be addressed. It's not the ore body's fault. I said that earlier in the conversation. It's not the ore body's fault. It's the approach. It was the approach's fault. And so that's when I was like, okay, so a new approach has potential here. And then I dove into getting to know Shane and the rest of the team here. And I mean, I'm obviously biased because I work with these people now every day. But I mean, this is a very good team. Shane Williams is a phenomenal mine engineer. I mean, if you look at his various social media profiles, everything is about his passion for mining.
Yeah.
And he truly is passionate about mining. I mean, he thinks about mining, I think, from the moment he wakes up to the moment he goes to sleep. And his dedication, I mean, he just came back last night after spending 13 days at the mine site. And I talked to him when he was at the airport in Red Lake. He'd been delayed 5 hours. So he was sitting in the tiny Red Lake airport for a very long time. But he was saying that he was just shattered from how tired he was because he'd been working 6 a.m. to 6 p.m. for 13 days in a row, because that's what it takes to make sure that a mining team, an engineering team, a milling team all understand what needs to be done and get the work done to make it happen. So, and then I think it's also important to note that Shane, as he rose through his ranks, which he did at Eldorado, and then went to Skeena, he also realized the need to be a good leader and has taken leadership courses. And so the combination means he's a phenomenal leader for this company, and phenomenal leaders attract good people. So then the others who he attracted to this team are also very, very strong as leaders in their fields. And so that's what means that the new approach, my realization that a new approach to the asset had potential, that turned it into a reality because the team is in place to do it. So
I was going to ask, because you hear this often, whether it's Rick Rule, and each guest I had on this whole week as well, was you could hand someone a great asset, and even have pretty good backing. Like maybe not the best team in the world, best backing, but the people, the management can wreck it. Even like an awesome asset, like this is a no-brainer. You've got this thing. It can go south quickly. Whereas I've heard people say, and you tell me if this is true or you agree with it, you could give someone like not a great asset that's like, oh, okay, I think we can make it work, but the management is amazing. They're right on it, and they can make it profitable, and that could be the difference. So, what's your kind of take on that kind of thing you hear?
100%. I mean, if Shane had his pick of mining projects around the world, would Madsen be his very first choice? Madsen is a great deposit, and it's great because it has all this built infrastructure, and it's in a mining city, and there's great, people and opportunity. We're going to define our first mining opportunity, and then we think that there's more mining opportunities based on additional discovery and depth potential and more of the 8 zone. Madsen is interesting, and it's going to work with the right approach for sure. It's not going to be a huge mine. It's not, unless we make some phenomenal discoveries, which definitely possible.
Yeah.
But at the end of the day, if Shane wants to build, if we at West Red Lake want to build a new Agnico Eagle, a new Alamos, a new major Canadian mining company, we have to start with one good asset.
Yes.
And that's what we found in Madsen. We found the asset that was good, that had lots of opportunity to get us into accelerated production, and that we could use to show everybody our operational abilities. And then we can move, then we can have that making money, and we can see what the next fish is that we want to take a bite of. Right. So it's not the world's best deposit, like the world's best project. It's not, there's lots of projects that are bigger, that are higher grade, that are whatever, but Madsen's going to be good. And the team here is going to make sure that happens. And then, then it's our foundational asset, and we want to see what else we can build on top of that.
That's nice. Now, I don't want to get you in trouble here, but you kind of brought it up. Are you guys going to be the next Agnico? Is that the plan?
I mean,
do you have big plans? Is that kind of the vision?
I wouldn't expect, Shane, who's built, he spent 25 years building mines around the world, some of them very big. Frank, who doesn't build single asset companies. They didn't partner to build a single asset company.
Yes.
They partnered to create a vehicle to give themselves and all of their investors leverage to gold in a rising gold market. And they very strongly, and I also very strongly believe, that the best leverage to gold in a rising gold market is through increasing production. And so we're trying to go from 0 to 60, 65,000 ounces a year with this first asset. And then we want to repeat that. We want to give investors a second opportunity to ride the re-rate by getting another asset and putting that one into production, or buying a producing asset that's been a bit neglected, or something like that, right? And giving our investors a new re-rate as a bigger producer, and then see if we can do it again. I mean, we have a goal of producing 500,000 ounces a year in 5 to 7 years. Absolutely.
Beautiful.
You got to have goals.
Yeah. Yes. Well, that's perfect. That's great. Well, I wanted that in the kind of so people could get an understanding too of, we've only kind of talked about right in your face, let's talk about Matson. We didn't talk about, look, how far underneath that could go, where it could go from there, but just the success of who out there is this near term, who to go into like a mid-tier space. There's not a lot that can be producing very quickly. And then also with that caveat, if someone goes, I don't mind a bit of risk, I want to make some big returns, or someone who's young and you go, I know I get the crypto space, it's like crazy, you can make huge returns. You can have big returns in the metal space if you have the types of setups that occur, like you've kind of said. You've taken all of this market wisdom and knowledge and said, well, this is what I've seen leading up to here. I'm going to go with this story because it has the potential for the biggest asymmetric gain. That's a great story for people to kind of see if they're wondering, okay, where should I be thinking? Where should I be deploying capital? What should I? Because once again, the exploration stories are fun. The treasure hunting, it's great. There's a curve there, but this is numbers, and that's a different world that becomes much more certain.
Yes, absolutely. That's you said it all. That's absolutely it. Like certainty is valuable, right? This is the time value of money. This is the value of low risk. Like these things get value layers for all the reasons that you just said. And you and I have invested in this space for a really long time. And so we've lived that value, or the lack of the absence of that value.
Yeah.
And again, like I say, exploration is so important, right? And I love it. But I'm always going to want a spectrum. And after living in the more exploration end of the spectrum for a long time, turns out that I'm where I want to live right now, and where I think a lot of generalist investors who are moving into the space, or who will move into the space, the lower risk arena has always been where they live, and so they should. Generalist investors who are realizing that there's an opportunity in gold equities should never own exploration companies, ever. It's way too complicated. But, they should either own major mining companies, baskets of them, pick one or two, whatever it is. Or if they want, like you say, a little bit more potential for oomph, then they should go into the slightly smaller but aggressive growth pursuing juniors. And that's the basket that is limited. There's not a lot of companies in that basket. That's where we want to live.
I love it because it reminds me of when people say with an exploration story, the price of zinc or nickel or gold is XYZ, and they go, well, we've got this much in the ground and our price is fluctuating because of the price. You're like, wait, no, you've drilled something, you might have something, you don't have gold, you don't have revenue. Like, I mean, let's slow down and back up a little bit here. And you have people reach out and go, wait, they've got that kind of value in the ground. You're like, no, they don't really.
Well, exactly.
Yes, you do. It's a bank, I guess. But this is something where someone can sink their teeth in and go, yes, there's revenue. There's safety here in that we can work with actual numbers, not, well, in 3 years, it might be this and gold might be here and might be there and everything else. So, so this has been wonderful to be able to kind of pick your brain and chat with you about just the entirety of where we're at. And I want to kind of sum it up a little bit because we called this the market mindset for a reason. And I always want to know the mindset of someone because, and I joke around it, like it's got to be part masochist because they like punishment to be on this market because you're going to be beat up a lot. But it is a very special person that even wants to enter and take away that right now we're in a special magical moment, I would argue, with this trifecta of debt, of bricks, of all these. Take that apart. When you would have entered way back when, what was it in your, do you think in your personality or the way you view the world that attracted you to it? Because once again, I would say there's definitely a mindset, there's a type of personality that A, can handle it, or two, totally avoid it.
Yeah, I mean, that's a really interesting question. When I started in this space, I had just finished journalism school. I had a background in chemistry and then journalism. And so, and I fell into a job at the Northern Miner, and I knew nothing about mining. I knew nothing about investing. I used to be an avid, like all as a kid even, and as a young adult. As I was growing up in my house, the Globe and Mail was always on our table, and I used to read it, but I would actually take the business section out because I was sort of maybe a naive teenage environmentalist, and I was like, ew, business. And I would put that to the side and read the rest of the newspaper. So like my parents were like, where are you going to work when I got this job at the Northern Miner? But what made me fall so much in love with this space that I've never left is that mining is this unbelievable, it is the point that brings together science, economics, human growth, like what the materials that we need for growth, social, political, like it requires all of these. Mm-hmm. And it's just, metals are essential for growth. They're essential for how our economy functions. We have to take them out of the ground. It is complicated to find them. It is super complicated to mine them. It is very complex socially to figure out how to disturb the environment to the extent that we need to do these essential actions. I just find it so endlessly fascinating. And it ends up partly being a study in people, because you see all of these ranges of reactions to what you're doing, from, you know, people who are passionate about the industry to people who are vehemently against the industry and everything in between. So I just find it endlessly fascinating. And then within that, in the mining world, nobody knows everything. So people who are mining engineers need a lot of assistance to understand other aspects of it, whether it's permitting or environmental or accounting, and all vice versa. So nobody comes into mining as an expert because there's so many requirements in mining, in exploration and mining. There's so many different bodies of knowledge that have to overlap that we all have to rely on each other, which I also really love. So I think those are the two things that have kept me in mining this whole time.
Excellent. Well, that's beautiful. Thanks so much. Gwen Preston over at West Red Lake Gold, of course, the resource maven as well. Thanks so much. This has been a real pleasure just to catch up with you, to pull out all these insights, and also to find out more, because once again, there's not a lot of companies right now that are sitting in a position that you are, and there is a lot of spotlight as well. And we're going to get to see some numbers here very soon. So this is very exciting on lots of fronts.
Yes, thank you so much. This was a lovely conversation. I had tons of fun. I hope people enjoyed it. And yeah, maybe we should do this again after that study comes out and we can dissect the numbers.
100%. We will for sure.
Fantastic.
Perfect. Thanks so much, Gwen.
All the best. Take care. Bye-bye.